will certainly do that.
All right. So, yeah, the perfect knockout. And as Raleigh said, I've been trading for a while. Actually, let's do this. So let's talk about what we're going to cover today, because I have a couple of sides. Quick intro. We'll talk about the power of knockout options. We'll cover the strategy in detail of the best markets to trade, strategy expectations, and then I'll make sure to review the setup so you know exactly what to look for so you can put this trade on. And quite honestly, it's probably the easiest strategy I've ever traded. So I don't mean, for some of you that probably is exciting, for others it's probably disappointing because it doesn't get any easier than this. But before we get into the details here, just a little about me and Rockwell Trading. I started trading in the late 90s during the dot-com era, started with stocks, and then a little after 2000, I got into options. And the options are a passion of mine. Love trading options. And that's really something that we focus on here at Rockwell Trading, options and stock trading. But I started doing some things with binary options. And I really, really have really grown fond of binaries. And I think that they're extremely powerful if you know what you're doing. And they're a great complement to any style of trading out there. So quite honestly, if you trade stocks, you could add binaries into the mix and it's not going to mess you up or distract you. If you trade options or really anything, you're going to be fine including binaries, especially if you keep it simple, like with the strategy I'm going to share. This is just a picture. Raleigh said that, at one point I was coaching him. This is me in the Bahamas with a bunch of our mastermind higher level coaching students having some fun. And so that's what we like to do at Rockwell Trading. Unfortunately, with COVID going around, we haven't been able to do many live events recently. I totally feel Raleigh for his lack of playing in Austin, because I know it's such a fun venue and they have a great band. But we'll get back to it. Things will calm down and we'll be able to do some traveling and have some fun events in the Bahamas and other neat places as well. But moving on, just we want to get down to why we're here, and that's to cover a strategy, to talk about a strategy, and for you to understand something that I trade every week. So with knockouts are a type of binary option that's available with Nadex. And the power of knockouts is that essentially you're trading futures without the hassle, right? If you've ever tried to get set up with futures, or if you are a futures trader, you know that there's intraday margin, there's overnight margin, there's a huge amount of leverage involved. And, for some people, futures are great. For others, it's kind of risky or might not be the best fit. But with knockouts and binary options, you're essentially trading futures, but a different product that has built-in risk parameters, right? So with a knockout, you have your profit target and your stop loss essentially built in for you. So whenever you put on a trade, you know exactly what you're going to be risking. And you know exactly what the profit potential is with that as well. Now, the other thing is that you don't have slippage. Now, there is a bit of ask involved when you're getting into trades, or if you decide to close trades early, but I'm talking about slippage when things go wrong, right? If there is this crazy overnight move, or even during the day, things go absolutely haywire, and you have a futures contract or futures position in the market, and let's say it's a pretty substantial one. If you're getting stopped out of a trade, like especially a commodity like gold or crude oil, it could be that you want to get out at one price, but you end up getting out at a substantially different price that actually adds to your losses. When you're trading knockouts in particular, if that lower level, which essentially is your stop loss, gets hit, that's it. You're not experiencing slippage, and slippage in some markets for futures could be 50, 60, 70 bucks on one contract. So this is huge for me. You also have the ability to benefit from overnight moves, and that is something that we're seeing quite frequently, right? How many times do you wake up in the morning, 9:30 Eastern time, you're getting ready to trade, and the markets have made this huge move overnight, especially with all the craziness going on with COVID-19. There were many times when a lot of that activity took place overnight. Now, you could stay up 24 hours a day trying to trade it. It made some swing trading a little tricky. With futures, you could trade it, but there are huge overnight margin requirements. With binary options, that's just not the case. So it is a product, especially the knockout options. You can hold a position overnight. Your risk is defined. There's no slippage. And to me, it's just the perfect vehicle to take advantage of some of these short-term moves that might last a couple of days. Now, let's talk a little bit about strategy. Like I said, for those of you who like very complex, sophisticated, difficult, impossible to learn strategies, you're going to be disappointed. This is not one of those, right? And I mean, that's why I wanted to teach this, because if you leave today's session, you'll have all of the rules that you need, right? There's not a whole lot of discretion where you learn something and then the next day you're trying to look at an opportunity, or in this case on Monday, you're trying to look at an opportunity and there's all of these different things taking place. And then, as some people will say, well, in that situation, you don't want to put a trade on, or in this situation, you need to consider whatever it might be. We don't have 50 rules here. It's just one simple rule. If RSI is greater than 40 at the market's close on Friday, we buy a knockout option at Monday's open, which would be 9:30 Eastern. It's as simple as that. Now, I'll show you how to get RSI. I'll show you the easiest way to pull that up. We'll also talk about the parameters for that, but it's as simple as this. And I'll also show you some performance numbers as well. The idea is that you're risking $50 to $75 with the goal to make $425 to $550. So in my book, this is a beautiful, beautiful risk reward ratio, right? With other strategies, and this is where that, to be, completely honest here, this is more of a home run strategy, right? You're going for the big wins. A lot of the strategies that I use, 1 to 2, 1 to 3 risk reward, makes sense. And those are good, bread and butter strategies. But here we're shooting for the fences. We're going for that big, big win. And we might have a couple losses in a row, and then you get that big win and everything's working out nice. The best markets to trade. Well, with knockouts, you could trade commodities, you could trade different Forex products, you could trade the indices, but our favorite markets to trade, the US 500 and the US Tech 100. Now, if you're not familiar with Nadex binary options, the US 500 is tracking the E-mini S&P 500. So the E-mini S&P 500 data is being used for the pricing of that US 500. It's just with Nadex, they had to create a different product and their name, and so the E-mini S&P 500 was already taken and trademarked, but essentially it's just their binary option version of the E-mini S&P 500. Same goes for the US Tech 100. The indicative, meaning the underlying market, the market that's being referred to when we're getting prices and when we're seeing the binaries, and we'll look at how the binaries are structured in a minute. The E-mini NASDAQ is the underlying market for that US Tech 100. So right now, I'm trading the strategy on just these two markets. These are my favorite markets to trade for this particular setup. Now, a few things to address. Expectations are so important because it's so nice to talk about a strategy that has a certain win rate, and as sharing a strategy, I'm not going to share a strategy that's just a dud, and I'm not going to highlight the times when look at all these losses, right? I want to showcase the wins because I'm excited about those wins, but I do want to talk about the losses because in order to trade the strategy successfully, you need to understand about the losses. You need to realize that this is a home run strategy. There will be losses guaranteed. So don't just think you're going to put on a couple of trades and have back-to-back to back-to-back winners, because with this type of strategy, it's profitable. I've made money with this strategy. I've made some nice money. In fact, I bought a house and I took some money out of my Nadex account for the down payment back in June because it was working out nicely for me. And I'm trading more than one contract. But with this said, it's a home run strategy. There will be losses. So there is a great risk reward, but the trade-off is a lower winning percentage. So the wins expected are about 25% of the time. So most of the time you will have losses. Now, I'll be honest. So I've traded variations of the strategy, and before Nadex named them knockouts, they were breakout. I think they were breakout. Anyway, they renamed I've traded this product a while ago, and then Nadex renamed it. And we made an adjustment to the strategy when that happened back at the beginning of May. And since I made that adjustment, my winning percentage is about 37%. So it's actually better than expected. It's like 36.7% or 36.8%. So my personal winning percentage taking live trades in a live account is better than 25%. But as a trader, it's important for me to understand what the potential risk is. What are my expectations from the strategy? And I would be perfectly fine if I had one win out of every 4 trades. That would be perfect for me. And I know that for a lot of people, that might be a little difficult. In fact, a lot of times new traders will say, well, what's the winning percentage? What's the win rate? To me, that doesn't matter at all. The win rate or the winning percentage to me is only a guideline. So if someone says I have a strategy that has an 80% winning percentage, that means nothing to me. If someone says I have a strategy that has a winning percentage of 20%, that means nothing. You can't take the winning percentage alone and really evaluate the strategy. The 80% winning percentage to me means, okay, it's a higher accuracy strategy. And what I would expect from an 80% winning percentage is that the profit potential is very small compared to the risk, right? And with a lower strategy, if it's a successful strategy, if someone says I have a great strategy and the winning percentage is 20, I would expect that the profit potential is very large compared to the risk that you're putting on or taking, right? And so this is a perfect example. And let's take a closer look at this. So just full disclaimer, these are hypothetical results. These are not live trades that I took, but these were trades that I evaluated when I was making a decision to trade this strategy live. And so what I did, this is for the E-mini S&P. So since the US 500 is based on the E-mini S&P futures contract, I analyzed this setup based on the E-mini S&P. And so all of these performance numbers are based on the E-mini S&P. And this, at the time, this goes back from May 1st, 2019 to May 22nd, 2020. If I was to redo the numbers, it would look better. But I went with easy today because I already had this screenshot, and for me this is because I've been trading it live, this is representative, if not a little worse than I've experienced live, of what this strategy is all about. So the total net profit for a year with this backtesting, $9,475, and there are 43 trades. This is a strategy that we put on Mondays, but because of the RSI filter, there were days that we did not put on that trade. So 43 trades for the year. The average trade was $220. Now, one thing to mention here is that when you're looking at this, the numbers here, not the winning percent or the total trades, but the overall numbers, the numbers are 5 times what I would experience with the US 500 index contract, right? Because the E-mini S&P actually is worth, as a value, is worth 5 times more. So if you were trading one US 500 contract and you had the exact same numbers, then you would have a $1,895 profit, risking $50 on a trade. I mean, yeah, $1,895 for the year isn't that exciting, but that's risking $50 on a trade. So you could literally have like a $500 account and risk $50 on a trade, and $1,895 is a pretty nice return. So anyway, going back to the performance here, there are a few things that I look at when I'm evaluating a strategy. Total profit, of course, but also the closeout drawdown is actually, I mean, they're usually very similar, but basically the drawdown is the biggest decrease in the account from peak to peak. So while the strategy was making money, although the end result was a $9,475 profit, at one point there was a drawdown, and it could have been that we were profitable and we never went negative for the year, but at one point there was a $3,250 dip along the way. For me, I'm okay with like about if I have a drawdown ratio that's about 1 to 3 of the net profit, or 1 to 4, in general, that's kind of a rule of thumb that I like to have, right? Because if the drawdown was $9,000 and the net profit was $94,750, that to me doesn't make sense. But if the end result's $94,750 and on the way I had a dip that was about a third of the total profit, I'd be okay with that. A quarter of that is even better. But for me, these numbers are pretty solid. And like I said, I've experienced numbers that actually improve upon this with live trading. Profit factor is the profit per dollar risked when you look at all of the signals. So basically what happened is, even though we might be going for a 1 to 7 risk reward, what happened is, based on these signals, there was $2.04 made for every dollar risked. Again, not that bad. Winning percentage, 20.9%. So, and these numbers are risking $50 on a trade, not $75 on a trade. So low winning percentage, but nice profitability. And we see that it's a winning strategy. And again, based on my live trading, my numbers were better because I had about a 37% winning percentage instead of that 21%. Now let's look at a risk graph here, because the risk graph says a lot, but this is where, when you trade this type of strategy, you really need to commit to it, right? You need to be willing to put on some trades, because it could be that you have a string of losses. And if we were trading the US 500 and we had the same result as the E-mini S&P, then what happened was, at the beginning of this testing, there were a couple of losses, and then there was a big win, right? And then there was a stretch of losing, and then a win. Losses, win, loss, win, loss, loss, win, loss, loss, win, win, loss, win, win, and then a couple of losses. So it's a positive, equity curve, but it's very stair-stepping, right? And that's very common with a home run strategy. So this is what I expect when I'm trading this strategy. But again, with about, here's a 20% winning percentage. This is why the 20% winning percentage doesn't matter to me. If trade number 1 is a loss, you're down $50. Trade number 2 is a loss, you're down another $50. Trade number 3 is a loss, you're down another $50. Trade number 4 is a loss, you're down another $50, right? 4 losses in a row. Not comfortable, totally normal for the strategy, and then you have a win. If you were trading the US 500 knockout in this situation, that would be a $450 profit. So on the 5 trades, you're up $250. So that's how over that year of testing, there was about a $1,900 profit, even though there were drops along the way. So this is what I expect when I'm trading this strategy, but it's a profitable strategy. I've made money. The testing showed it was positive, and I am trading this every Monday. Now, let's also look at the U.S. Tech 100 results. I wanted to start with the E-mini S&P first because the results were okay, right? And I do trade the US 500, and I also trade the US Tech 100. And I mentioned that those are right now our two favorite markets for trading the strategy. And so over the same testing period, basically May 1st last year to May of 2020, there was a net profit of $16,120. Just like the US 500 versus the E-mini S&P, looking at dollar amounts here, if I was to translate this to the US Tech 100 binary option, the dollar values are a fifth of what it would be for the futures contract. So instead of a $16,000 profit, it would be $3,224, risking 50 bucks on a trade. So here there were 45 trades for that year. The average profit is about 62 bucks a trade. Here, the drawdown versus the net profit is actually better. It's less than, the drawdown's less than a quarter of what the net profit was, right? So along the way to this $16,000 profit, there was a $3,200 drawdown. If we look at the profit factor is better, 2.58. So based on all of the signals and trades that occurred during this testing period, there was $2.58 for every, or made for every dollar lost, which is great. You know, I'm happy to make 258 for risking a buck. We see that the winning percentage here is 20%. So instead of 20.9, it was slightly lower, but we have a higher profit per trade and we have a higher profit total. So I'm okay with this lower winning percentage, and it's a home run strategy. So that's exactly what I expect when I'm putting this trade on. And as I mentioned, with my personal live trading experience, I'm closer to 37%, but I'm okay even if that comes back down to 20%. Now, if we look at the equity curve for the trades for the US Tech 100 or the E-mini NASDAQ, this is what the equity curve looks like. So stair stepping, which again is what we would expect, but a lot smoother, a lot nicer than the equity curve for the E-mini S&P, right? So you have a couple losses, then a win, couple losses, then a win, string of losses, then a win, losses, win, losses, win, and you get the idea. So this is what I'm after. I'm okay trading through a string of losses because I get one win and everything looks great. Now, actually, let me go back here to the previous slide because there is another, let's see here. Here's another number that I like to be aware of. Most consecutive losses, especially with a home run strategy, because there's two parts here. One, I expect consecutive losses, right? If we're trading with risking one to make one instead of risking one to make seven, if we're at a 1-to-1 even risk reward ratio, then I'd want a 55% winning percentage or higher. And I would expect that I would have more frequent winners, because really it's, more than a little more than half the time it's a win and then a loss. Win, loss, win, win, loss, loss, win, win, win. You get the idea. With this strategy, knowing the most consecutive losses is actually a good thing to know for two reasons. One, it's good to understand what type of losses can occur, and 8 losses in a row risking $50 at a time would mean that I should be willing to risk $400. So one, I want to know how many losses could potentially happen. So I have something to base my plan on. 2, I like to know what type of drawdown could happen overall, but also consecutively, right? And so 8 losses in a row, no big deal. But if I'm trading this strategy for the profits and I'm trading because of the potential and I like the potential, I like the strategy, I see that there's money there, then I can't freak out or panic if I have 5 losses in a row, right? Because based on these numbers, based on the testing, I should be willing to take 8 losses in a row because that's what occurred in the past. Either as a technical trader, you're basing decisions on past behavior and you basically accept and expect that the past behavior will be recreated. And if it's recreated, you should expect the same result, if not a little bit worse, right? But most traders don't, that's one of the problems of executing a strategy and why a lot of new traders or traders in general struggle is they look at this number, the 16,000 profit, and they think, okay, I just need to trade this strategy. I'm going to make some money. Great, right? But they don't look at this number, 8 losses in a row, right? So then after 3 losses in a row, they start tweaking things. Or after 5 losses in a row, they panic and they say, forget this, I'm trading another strategy. Well, you do that, you're going to trade every good strategy to its worst drawdown and just go to drawdown after drawdown after drawdown. Actually, let's go back because I didn't mention the consecutive losses for the US 500. Let's just go back there because I don't remember it off the top of my head. And I think that, oops, I think we should know that too. Okay, so for the US 500, the most consecutive losses was 13. 13. So 13 times 50, because we're risking $50 a pop. That would be a $650 loss in a row. Now, 1 win, $450. 2 wins, $900. So in this case, 2 wins makes up for the most consecutive losses in a row. With the US Tech 100, 8 losses in a row can be made up in 1 win. Because actually, if you're risking $50 in the US Tech 100, the max profit isn't $450, it's $550 based on how that contract's structured. So with 8 losses in a row, you'd be down $400. And if you have 1 win, you make $550. So you're up $150 with 1 win out of 9 trades. Not too bad. Not too bad. And honestly, I might sound like I'm just totally going over the same idea again and again and again, but I promise you, this is the most important takeaway, because it's so easy to be lulled in by the profit potential. And when I show the contract and how easy it is to put it on, it's so easy to see the profits there. But the reality is, to get to those profits, you have to be willing to buy some losses. All right. So here's the equity curve for the US Tech 100. Technically, it's for the E-mini NASDAQ, but the E-mini NASDAQ is the underlying market for the US Tech 100. And I love it. In fact, I'm trading the US 500 and the US Tech 100 together, but from just a purely tested perspective, an equity curve perspective, the US Tech 100 definitely looks better, right? Better equity curve, better numbers, smaller losing streak, higher profit, higher profit factor. So all of these things look better for the US Tech 100. But I'm happy to be trading the two together. And to be honest, in live trading, I haven't seen too much of a difference. The US Tech 100 is going to move faster, right? The NASDAQ right now is just going nuts. So, this year, I mean, you probably know that the Dow's lagging behind the major indices. The NASDAQ is just going crazy, making record highs all the time. The S&P recently took out its February 19th record high, but kind of, it's taken a while to get back to that point. And even as we're flirting with those record highs, the NASDAQ was pretty consistent, just tagging, record high after record high, just taking off. Tech stocks have been awesome. But the S&P has just been a little slower. So it makes sense to me that the NASDAQ numbers are a little better, but combined, I'm happy to trade them together, even though the S&P numbers-wise isn't as nice. Now, I do see that there is a question here. Is this a long-only strategy, or it can be played to the downside also? To be honest, it's a long-only strategy. And what I found with my testing is that the longs were more consistent because overall, the market is in an uptrend, right? Go back as far as you want to go. Overall, you have to be bullish the markets. Now, it might be that you're bearish at times, or there's pullbacks or drops or corrections. But if you're a consistent bear, unless there's a huge fundamental change in the market, that's gonna hurt you, right? And I do know people who have been consistent bears going back to the the housing crisis, where they thought that there was no way the U.S. was ever going to recover from that. And I mean, even recently, COVID-19, I was more bearish than the markets were. I thought that after that drop, I expected a correction, and I thought that when earnings season came, we'd take out those lows and then get the correction. That didn't happen. So you really need to trade what you see, not what you think. What we see is that overall the markets are bullish. There are sharp drops, but this is why we use that RSI filter, which I'll show on a chart in a minute, because the RSI filter keeps us out of trades when the market is falling. But even with falling markets, it could be that it's a little too volatile to really capture an opportunity with the risk reward ratios that we're working with. Okay. So let's well, here's an example with the US Tech 100. Again, with the US Tech 100, based on back testing, there was a 20% winning percentage. Based on back testing, this is a typical scenario. Down $50, down $50, down $50, down $50. So you're down $200, and 0 out of 4 trades are winners. Then you get that win. 1 out of 5 trades and is a win. You have a $550 profit, and you have a total profit now after 5 trades with a 20% winning percentage of $350. Again, this is all hypothetical. However, with my live trading, I have seen a winning percentage that's closer to 37%. So I've seen better than this, but there are losing streaks for sure. For sure. I've experienced them in live trading as well. Just one more thing. Let me go back here. I'm sorry. Other thing to point out here, I mentioned it earlier, but just to be clear, with the way that the knockouts are bracketed, or the prices for those knockouts, the total value of the knockout is 500 for the US 500. The total value of the knockout is 600 for the US Tech 100. So that's why here, if we're risking $50 in the US Tech 100, the profit is 550, but in that hypothetical example, profit was 450. So that wasn't a typo. That's just one contract, but it is a futures contract. Okay, so let's talk more about placing the trade and the setup that I need in order to have a trade for Monday. So one nice thing about the Nadex, and this is actually a screenshot from their old software, but the new Nadex software actually shows it too. Whenever you're putting on a trade, the max loss and the max profit is displayed for you. So you know exactly how much you're risking if you put the trade on, and you know exactly what your max profit is, which I think is great. I mean, you don't have that with stocks at all. With options, depending on, well, you have it with options if you're trading equity options, but most of the time that's displayed on another page or after you're putting the order in, right? Not at the very beginning when you're putting the trade on. So this is one thing I really like about Nadex is that it's all there for you to see. So you're making a decision on whether or not the risk and the reward makes sense to you. One other thing that I just want to mention, I know that Nadex was discussed in the previous presentation, so it might already be clear. But if you're going to trade binary options, please, please, please only trade them through Nadex. And this is a full endorsement for Nadex because I have not experienced firsthand the scams that take place overseas, but I have talked to people who have lost thousands and thousands of dollars because they get caught up in some scam with binary options brokers that are not legitimate overseas. So do yourself a favor, only trade binaries with Nadex. They are registered and they are in the U.S. They're in Chicago. I've actually been to their office. I know the guys at Nadex. They're awesome and they're legitimate. There's oversight for them, right? So just stay away from the international stuff because I've heard too many horror stories. All right. So to put on a trade on Monday, what we want to see is that the E-mini S&P has an RSI reading above 40 on Friday. So at the close on Friday, we want RSI to be above 40. Same goes for the US Tech 100. It's really as simple as that. So we check the daily chart for the E-mini S&P and E-mini NASDAQ. If RSI is greater than 70 after Friday's close, we buy a knockout. We place the trade. The numbers that I show were based on $50 risk, but my sweet spot is 50 to 75 at Monday's open. So if the knockout has risk between 50 and 75, I put it on. If it's below $50, I pass. If it's above $75, I'll just use a limit order for 75 and let it work for the day. And then we just set and forget. With current market volatility, you're probably going to find that you either make your full profit or full loss within a day or two. In the past, before the COVID stuff, the expectation was really to hold it to Friday. The trade itself with a knockout bracket is a weekly trade. So they're available to trade on Monday. You could trade them all through the week, but then they will expire on Friday. So if it hasn't hit the full profit or the full loss and it's still open, then the profit or loss will depend on where the market's trading at, and it will just close automatically on Friday. So for me, it really is set and forget because they're just working for me. If I hit my full profit, great. If I get stopped out, no big deal. If it's there Friday, there's nothing to do. It will close. And typically, if it's gone all the way to Friday, it's going to close for profit. Okay. Let me pull up Nadex here, the Nadex platform, and let me show you how to pull up these contracts. There is a question: are you using Nadex charts or another charting service? In that screenshot that I showed, it was a screenshot of the old Nadex order ticket, and it was a screenshot of a TradingView chart. In general, TradingView is nice because they have free charts, and if you want to pay for data and some of their other features, it's pretty cheap, right? So I think TradingView is super easy to use. However, you do not need TradingView because everything you need is in the platform. So this is the new Nadex platform, and on the left-hand side, you'll see that they offer 3 different type of binary options. You have the outright binary options, which have a max value of $100. You have call spreads, which are kind of combining 2 options, but it's similar to a vertical spread, debit spread, or credit spread that you would have for equity options. And then you have the knockouts. The knockouts are what I'm trading for the strategy on Mondays. And the unique part of the knockout is that it's similar to having a profit target and stop loss in the market, because if we go to indices, and I mentioned that they're a weekly contract, so they begin trading on Monday, they expire Friday at the close. Here, US 500, there are always going to be 4 available, and the easiest way to bring up a chart and the knockout is to just click on the blue number at the top here, because this is the bid, sorry, this is YASK, for this contract here. So let's talk about what this contract is. This would be similar to what I would experience Monday at the open, but of course it's not Monday at the open. So if I pull this up Monday at the open and I clicked on this price here, you see that it's set up a buy order. See, if I click on sell, it goes red, and this would be a sell order, so it would be selling the knockout. But if I click on the buy, it's a buy order, and I'm buying the knockout. So what I would do in this situation, you would adjust your size to trade whatever you want. But if I look down here, it says max loss if 33.61 is touched is $143. Max profit if 34.11 is touched is $357. So based on when I click on the buy here, which is the ask price, it's basing this trade on the price that was there when I clicked on it, right? So if I was to enter this at 3375.2, then my max loss is $142. My max profit is $358. So if I put this trade on and I didn't change anything, this is where the market's trading at. And on the chart, you see what's referred to as the floor and the ceiling. The floor is 33.61. And if 33.61 is touched, we have $142 loss. So just like a stop loss, if you were putting a trade on, it's the same idea. The floor is basically your stop loss. The difference is there's no slippage, right? So if you got into this trade and it says max loss if 33.61 is touched, if it's 142, you're not going to lose $150 because of slippage. It's 142. That's it. And then we also see max profit 340.11 or 34.11 if touched is $358. So if 34.11 is touched, it just has to trade there. The E-mini S&P has to trade there, and then this will automatically be closed, just like a profit target. So what I would do is next to price here, I would just keep clicking this. You could hold it down. You could adjust the value itself. But if I keep clicking this, so I see $75 at risk. So we're pretending it's Monday morning. Then basically, even though the market's trading at a higher price, I can put in a limit order at 33.68.50, where now I'm risking $75 to try and make 425. So if I pulled this contract up, and you're always going to pick the binary option or the knockout at the very top. So that's the one I'm always selecting on Monday's open. And then if the price is between 50 to 75, I'll just place an order at, oh gosh, sorry, my trading partner is deciding to say hi. Hey, get out of here. There we go. He had to chime in too. He thought that I was wrong with the risk, but no, that's not the case. So my max loss, $75, 425 profit. This would be the exact scenario that I would put on Monday at the open. If the risk is between 50 to 75, I would just go ahead and submit the order. You could even use a market order if you wanted. That's up to you. But basically 50 to 75, I put the trade on. Above 75, I drop it down to 75 and I'll submit it as a limit order. Now, you see here that for the US 500, we have $500 value, but because The max value between 33.61 and 34.11 is 500. If I go to US Tech 100 and I click this top one and I click the ask price in blue to bring up a buy ticket, here we see that based on that last price, we would risk 127 and potentially make 473. So total $600 value. Same thing on Monday. If I saw that the risk was above 75, I would just drop the order entry price to 75 and I would place the order, and we see here max loss 75 bucks, max profit 525, and that's what I do on Monday. Now the only other thing that you need to worry about is the RSI value, and I mentioned that in Nadex you can pull up everything that you need to know. At the top here, when you bring up an order ticket, it's going to bring up a chart for the market that you have an order ticket up for. And at the very top, you can change the time frame. So there are intraday time frames. We want to change it to daily. And then here you see this bar, this icon that looks like bars, a bar graph, and it says indicators actually when you put your mouse over it. If you click on this, you can add any indicators that you would like. And if you select RSI, I just removed it, but I'll add RSI back. Now you have RSI added to the platform. And here it comes up with default values. If we click on this, we can adjust the period. This is something I want to do. Instead of a 14 period, which historically is a default value for most charting software, I adjust to a 7 period. So it's a little more responsive to current market conditions. So I'll use a 7 period setting. You really don't even need to mess with this here, but what you could do is you could take that 30 and turn it to 40. And you see, it's actually trying to highlight it when it gets down to 40 or highlight when it gets above 70. There's probably an easier way to do it, but what I do is I just look at the RSI reading. So here, if we come down and we put our mouse on this current bar, it is today's bar and RSI is at 65. If I put my mouse on the previous bar, RSI is at 57. And that's what I would want to do. If Monday has started trading, right, because futures are open pre-market, then I would put my mouse on the previous bar, which would be Friday, and I would double check RSI. If RSI is at 39.99, I will pass on the trade. If RSI is at 40 or higher, I will put the trade on. And it's as simple as that. Question, when you say Monday's open, do you mean 9:30 Eastern? Absolutely. So honestly, my routine, I have an alarm every Monday at 5 minutes before the market opened to remind me, because otherwise it's easy to forget, right? You're just doing your stuff, because I trade other things, right? So you get carried away, you do other things. I have an alarm that says knockouts, and 5 minutes before the market opened, that alarm goes off. That gives me time to pull up the Nadex platform, to pull up the chart. I could double check RSI and then get an order ready. All right. Jack says my trading partner doesn't like that trade. Yeah, because I'm breaking my rules. It's Thursday, not Monday. All right. Raleigh, is that you?
Yeah, this is me, Mark. This is my subtle way of saying that we've got about 5 minutes left.
Nice.
And Mark, I mean, just a fantastic presentation. And I can't think of anything more in keeping with the theme of making, keeping trades simple, making them simple. And you picked off some of the questions, but there's some that I noted here, Mark, that I'd like to share with you.
Sure.
One thing real quickly, and looking at your profit and loss analysis that you were working on, performance, et cetera, what are the commissions with Nadex? Is that a consideration for you when you're taking a look at these things?
Great question. And that the numbers did not include commissions, but it was based on one contract. And with Nadex, you pay $1 to put the trade on, And if it's a winner, you pay $1 to settle it. If it's a loser, there's no other fee.
So it's inconsequential. If you've got 8 losses in a row, you're looking at $16 worth of commission
$8.
costs. $8. Oh, that's right, because they were losers. So okay, I think that answers that question. A couple of others that I thought were interesting. Obviously, Mark, this is something that you take advantage when the market is moving long. Did you look at some kind of an RSI strategy to take a look at this if the market was actually moving short, selling off?
Sure. And it's a fair question. And I did look at it and I will revisit it. But to be honest, I didn't see anything consistent enough for me to want to trade it as a strategy. Because yes, when the markets are dropping, it's very easy to see. But most of the time, the market's going higher. Right. And so you just get a couple of fake outs, and sometimes the drop is a little more misleading. It's easier to see on a chart, but technically if you were putting the trade on, it would be a loser.
Sounds good. And once again, I hope everybody appreciates the work that Mark went into putting into this, the analysis that he put in prior to that. And, up front, this is not an 80% winning strategy. It's 25%. He's experiencing 37% now, but that could drop back down, but it doesn't matter. The numbers prove out to themselves. Another question here I thought that was great. Because this is the way my mind works as well. So you have a winning trade, and the chances are 1 in 4, 1 in 5 that you have a winning trade. Did you ever consider skipping a couple of weeks? Because the probabilities are they would be losers.
It's a fair question. And to be honest, I would not, and it would be for 2 reasons. One, in my experience, I think I had 4 wins in a row. Okay. And so if I missed those 4 wins,
you'd be pissed.
That would suck. and then the other thing is even looking at the hypothetical results, I'm not going to go back, but basically 2 wins in a row was normal, but not really much past that, right? But even if you skip that second win in a row, that basically finances 8, 9 losers, right? So I'm okay having 1 loss, but if I miss that win, I that messes things up.
And so obviously what we're talking about is tweaking something, and this is a set and forget, which gets back to the last question, which is, I think, Mark, you said that in today's highly volatile times, these trades might run to conclusion within 1 or 2 days. In some cases, they might last all week. Do you ever consider taking a look at a trade and going wow, I've got nice profit here? Not your total profit target, but I don't know, let's say you're up $200-300. Mm-hmm. Do you ever take that consideration, or can you exit that trade at that point in time and bank that as opposed to keeping it, through expiration?
It's a valid question, and it's fair. For me personally, I do not do anything other than what I shared with everybody here. Now, I have had some traders, in particular in our mastermind group, because our mastermind group is the group that we first shared the strategy with, who, if it goes up to $200-300, which recently there have been a couple of times it was up $200-300, and then it went the other way. I had a loss. They decided to close it out early. Just be careful though, because if you really start to take profits too soon, then the numbers don't necessarily make sense.
Absolutely. Yeah. I mean, everything, all the testing that you did, you throw out the window, because now you don't have any statistical basis. Mark, I wish we had more time because, well, first of all, it's just great seeing you again. And a lot of questions that I certainly have about this. Do you have some kind of a special offer or something around this that you want to mention to folks?
It's not about binaries, but like I mentioned earlier, I love binaries. This is something I do every week, and I just think that the knockouts are an awesome vehicle. I'm really looking into doing some more with it. But in general, what we do at Rockwell Trading is more options and stocks. And so Marcus, the owner and founder of Rockwell Trading, he's written a book, the PowerX Strategy, and you can get this for free if you cover the shipping for $4.95. And I'll be honest, that some people who don't understand publishing and these type of books, they think that we're making a ton of money on this. No, there is no money being made here at all when you pay $4.95 for shipping. Why do we do it? A, we like to help people, but B, we want you to be a fan, right? So like we would love for you to love Rockwell trading and talk about Rockwell and, you know, for us to make a difference in your life. The way to do that is to get out as many books as possible. If you pay $4.95 for shipping, it's yours. And I know that you're sharing a link so people can take advantage of it.
I only have one question, Mark. Does it make trading simple?
It makes it simpler.
That's what we're here about. So the PowerX strategy is just another one of those simple trading strategies. Mark, thank you so much for your time today.